Hello, I'm Bernard, Hickey from interest.co.nz, and welcome to our Roost Home Loan Affordability Report for August. Now, we do these reports monthly and we look at how much it costs of your disposable income to service the mortgage on a home. And we look at it across New Zealand and across all the regions in New Zealand. What we found for August is a slight worsening of home loan affordability. When you look at the regular measure of home loan affordability, which is the median income, how much of that is required to service the mortgage, an 80% mortgage on a median priced house, that has deteriorated slightly to 51.5% of a single median income from 50.2% in July. That's because the median house price in New Zealand has risen slightly from about $345,000 to $355,000. But of course, that's the national figure, and it disguises somewhat of a two-speed market in New Zealand. In central Auckland and in Christchurch, we're seeing firmer house prices than in the rest of the country. In Wellington and in many of the provinces, we're seeing flat to falling house prices. Volumes of houses being sold are up about 20% from a year ago, but of course they're still well below their 2007-2006 peak. House prices overall are still about 5% below their 2007 peak. But affordability is at its best level since early 2004. That's all about low interest rates. And the outlook for interest rates is now even better for borrowers at least. The Reserve Bank of New Zealand last week came out and said it saw interest rates rising by only 150 basis points from 2.5% to around about 4% over the next year or so. Now previously it had been saying they would rise by about 200 basis points, that's 2 percentage points, over the next year or so. And now economists are saying that official cash rate is unlikely to rise until March, when previously they'd expected a December increase. Just to give you an idea of how the world's changed in the last month or so, the Reserve Bank of Australia, which had been expected to increase interest rates, is now seeing cutting those interest rates. The IMF has warned of a slowing global economic recovery. And we're seeing a slow rebuild of houses in Christchurch. The high New Zealand dollar is also keeping inflation under control. Now that all means that rates, although they're likely to rise, will stay lower for longer. House prices too will depend on what's happening with housing supply. And the issue of supply is most acute in Auckland and in Christchurch, and that may explain why house prices are firmer in those two areas. Auckland, obviously, because of leaky buildings and a lack of new supply coming into the market. New building construction is at a decade low. And in Christchurch, we all know what happened with the earthquake, and we're certainly seeing a slow rebuild going on there, some insurance issues, and for many people, they're still waiting for those earthquakes to stop coming through. Now, there's various measures of home loan affordability that are included in the report, including our household home loan affordability report. Now, that measures what would be the case if you had two incomes. And our first one that we look at is the first home buyers household affordability report. And that shows that for those people with two median incomes who are relatively young, it only costs 20.7% of their after-tax income to afford an 80% mortgage on the first quartile house. Now that's actually up very slightly in August from July, but well below the peak of 35.1% that we saw in 2007. Now I just want to show you what's happening on our site in terms of looking for detail on those reports and looking at the charts that we've got. So underneath this video, underneath the video, you'll see the rest of our article. And you can see as you scroll down, there are links underneath here to the various regional reports, and you can click on them. There's Northland there's Whangarei, and you can go through the various parts of Auckland, Nelson, Canterbury, they're all there, and you click through and you can see the various affordability reports for your region. And you can see what's happened with this table through the last 4 years or so, and what's happened in August from July. And then of course down the bottom here we've got our interactive charts which show you what's happened to affordability, and I'll just go through show you what's happened in New Zealand overall. in the last 4 or 5 years. And you can see here through the housing boom, the proportion of income needed to service an 80% mortgage rose from around about 45%, and it got up to a peak of over 80% in mid to late 2007. We then saw a big drop in house prices and interest rates at the same time. It got down to 54%. Then back up again as interest rates, there was a temporary rise in interest rates and house prices rebounded a bit, and then affordability has improved through 2010 and into 2011 to the point now where home loan affordability is at its best level since 2004. Well, there you have it, our monthly Roost home loan affordability report from here at interest.co.nz. This was brought to you in association with Roost Mortgage Brokers. I'm Bernard Hickey for interest.co.nz.